All right, so I guess it's just gonna be us few, which will be easier. Um, so let me go ahead and all right, so do this and get started. So I wanted to talk today about grading your trades and also one of the things that I realized that I need to get back to is analytics, right? And that's having like numbers involved in my trading and knowing my numbers all the time. So before I go on, this is like for right now, I'm just gonna be trading like my demo accounts right now because I just want to get my bearings back. So I just been trading demo accounts for the past like week or so since I've been back, and I have, I just want to get comfortable after taking that big of a loss. So that way, you know, I can get back in there and do it the right way. So I just kind of told myself I might be just trading demos for the rest of the year until the new year starts. So it's only 2 weeks left. There's no point in me like trying to press buttons right now or push too hard right now with it being um oh, I hope y'all took advantage of this 10% off on the FTMO. But anyway, that's another comment. But I wanted to kind of go over what you should be looking for when you're grading your setups. And I don't have a list or anything like that, but I want you guys to take notes. And a lot of this stuff is just stuff you know already, but it's just the way you look at it will kind of help you guys be able to use that as a catalyst or some rules to follow while you're trading, right? So if we're looking at um, like grading your setup, right? There's a couple of things that I like to look at when I'm looking and considering like what's an A plus setup, it's a B, C setup, and so on. Like anything less than a C, I wouldn't probably trade it unless I just don't care. But each one of these, you're gonna always want to know and have a catalyst. And your catalyst can be technical, fundamental, and technical versus fundamental, meaning you want to have a chart pattern structure or something. And then fundamental, it would be implying that it's something news related, that you want to see that you have either one of these as a predominant factor in you deciding what your trade looked like, right? If we going back to today and looking at what today had, 8:30 a.m. was a good time to be looking at a trade because we had PMI and we had the market about to open at 9:30. So when you're considering trades, you can take the approach of, you know, I am going to just look at the week ahead, starting on Monday. I can already see like certain red folders. So like tomorrow, we got all of this information happening at 8:30. So this will be like a primary time for me to be looking at the market and looking at trades, right? And this will help you to kind of stay away from the charts at times when there's nothing going on, right? So if I see already like 8:30, I got news. If I was trading NZD, I would want to be on my charts around 1, 2 o'clock. If I traded um, Chinese currency or pairs related to that, which not a lot of us do, 9 p.m. or 2 a.m. Maybe I want to trade London or whatnot. That's one thing, right? But this gives you a good reason to be in the market at this particular time, right? Versus just sitting on the charts, taking setups or taking trades that don't have any catalyst, right? And a lot of times we try to get into these trades and it's London or it's a slow market and there's nothing that's actually moving the trade. So you'll get into a trade and it might be a good idea, but because it doesn't have a catalyst, then you're just getting in a trade just based off of what you see happening on the charts. And it just might not be time for it to move. And that's what happened a lot of time to people when they get in a trade and it fakes out, and then later after it fakes out, it gives you the trade that you were looking for in the first place, right? So the next thing is your setups, right? Like, do you trade order blocks? Do you trade break and retest? Break and retest. Breakouts. Order blocks. Whatever it is, etc. Right? That goes with what are your best setups, right? So if you like reversals, right, you're gonna want to see your reversal with a given catalyst setup that will give you a higher grade on what you think this trade is going to be, right? Um, and you know, sometimes you trade break and retest, but already you don't have a lot of success with that. So that's going to probably lower the grade of that particular setup. So maybe instead of you taking this trade with like a large lot size, maybe you would want to lower the lot size if it's something that you um, don't always have the best luck with, but you still like the setup, right? So that may be an opportunity for you to take the trade, but like just lower your risk side. And that's why grading your trades are a little is important, because not only does it help you like determine if it's a good setup, but it also help you to say, you know, I would probably only want to use um, less than 1% on a D grade or a C grade setup, right? And if it's an A setup, I would probably use whatever my max A plus setup, or I might want to use the max risk that I normally would use, or the highest risk that I normally would use on this trade, because I feel more confident. There's a catalyst, my favorite setups coming up, and the technicals and the fundamentals are lining up, right? The next thing is, you know, is the risk worth the trade, right? And along with that, is the risk worth the trade? And then is there an obvious target, right? Um, if we look at what happened today, right? And today was let's say we were trading during New York, right? And let's say we sold here. At this given time, zooming out to the next window, if we had sold from this area, your target would have likely been here, right? In this area right here, right? With a risk reward of what? You selling here, would you use a target here as would you use a stop loss here, here, or here? And that's what you're defining when you talk about your risk, right? If I took this sell, would I have used a stop loss here, here, or here? So those are the kind of questions you want to ask when you're talking about the worth, the risk worth the trade, right? Or if we were trading, gold. Like I took this trade on gold this morning and it was selling off. I did not use a lot of risk on this trade because I knew that if it didn't go when I thought it was going to go, that there was a high probability that I would lose this trade, right? It worked out, but in this case, I only used a stop loss of like 30 pips, and actually it was tighter than that. It was really here around 20 pips because I used the low of this candle, the same candle I entered on. And let me go here. So on this particular trade, if we zoom in, even though it wasn't along with what was happening, I used this bottom of this wick right here as my stop loss. And I was willing to lose whatever this was, 19 pips, to gain at least the monthly right here. That was my main goal right here. Obvious, right? If I did buy this, right? If it was going to just reverse from here, I should at least hit the monthly and I would have made 48 pips while risking 19 pips. That's definitely more than 2-to-1 on that, right? So if I had a lost this, I would have only been looking at, losing 19 pips and at least gain 48 pips. And even though it didn't go to where I thought it was going to go, which was around here, I did get to take about almost 90 pips out of this, right? So that's what you're referring to when you're looking at what your risk is. Like, yes, I am trading. In this case, I'm trading against the overlying direction of the market because at this point we were dropping. But in this, every time I trade gold or GU or EU, I do whatever the opposite of dollar is. So at the time, this candle was pushing down. This market was pushing up, and that's what I was trading at that time, right? Um, Also, that also goes into, we can add this to the setups, right? Correlation, right? Are there any correlating pairs that you could trade against? And in this case, dollar versus gold, they inverse correlate. A pair that you could have traded with dollar is USD CAD. You can pull this up. So at this time, where we are on the hour, 4 hour, right? This candle is here. So this candle, it didn't quite sell off as hard as this candle did, but this wick right here show you that at one point it was selling off. And simultaneously with dollar, as this was selling off, it reached a point to where it would buy from, just like dollar did. So you can see that there's definitely enough correlation as to where you would have been able to take this same trade and looking for a buy around this area simultaneously as dollar is looking for a buy around this area near the weekly, this one near the monthly right here. So always keep that in mind. Then you have look at my notes right quick. Then you always have to consider with the risk as well, is there an obvious target? Like for my case on gold, like I mentioned earlier, go right here. For my case in gold, taking this setup, I was comfortable with at least getting it from to the monthly, right? Must be using a different broker. Let me go over here. Yeah. Okay. So, like I said, from here, my obvious target was the monthly at the time. I really was not looking for more than that, given the fact that we were already selling off from higher time frame moves. We had already sold off from here. I was looking to at least get in the monthly, but I was also looking for a long-term setup to see if this wick rejection was the lead to a push back up in order to sell. So I was looking for the reversal out of this, right? And for the most part, I hit what my obvious target was. And in the case of like, if you were trading the sell-off from here, you have some areas within here that, okay, if I'm taking this trade from this high, right, I know that I should at least be able to get this low right here at the minimum. That if I'm selling from here, my obvious target is here primarily. That's where, you are going to want to take, your bigger profits right here, because at this point, this could respond to this area and reverse to push back up, but it also could push through. So at least I know if I get to this point, I can take a nice size partial, and then I'm going to be looking from this low, where are my next areas to target from, right? And this is a gap right here, we in between, and there's an order block and there's a monthly, right? So there's three things in competition in this particular area, and then it traded to the order block right here, a small one right here, but you had the low of this gap and then the monthly that it still may be able to hit, but you would have at least made it down to this area with another nice partial right here, and without having to worry about, if my setup is still intact, right? So that's the other thing. The next thing about your grading is you want to make sure that you understand what setups you like, right? I think we talked about it earlier, but your setups have to be back tested in order to answer this question, right? And if you're taking your setups, right, you have to know, like, you have to do data on your own self. You have to back test and learn your own trading habits in order to answer this question, right? And it can't be something that you just take a guess at, right? You need to have the numbers to prove that whatever that is going to be your favorite, or whatever trading style that you're going to use is your favorite and the one that you trade the best. So this will lead me into how do you understand that, right? And I'm going to use this at some point. The one of the ways that I recommend that you guys do this is to use some people use my FX book, but I like this site better because you can get way more information. And this is FX Blue, and you can set up an account with them for free. And you can get all the data about your account that you need in order to make better decisions. Like I was talking to my wife when we went to this conference this weekend, and one of the things that came out of the conference and that I already knew about myself, but I stopped putting it in place, was that I have to always make my decisions based off of numbers, right? So if you do that, you take some of the error out of your decision-making process. And combining this with grading your trades will help you make better decisions about your trading account, right? And you can simply go to the home, and you're going to go to click on this link right here, FX Blue Live, free web-based services. And you click on this link, and I'll log out so that you can see how to set it up. It's going to ask you, you don't have to worry about this. You're going to click on register, sync your account. And then once you sync the account, you're going to find a broker that your account is with. Let's say you're using FTMO. If you're using FTMO, it's right here, the demo, the live server, and their second server, or Hugo's Way. There's Hugo's Way right here. So you're going to select the broker, and you're going to put in your account login and using login and password. It's going to be the login to the MT4 account, not what you log into your broker website with. It's going to be that same information that you use to sign into MT4 with, right? So once you get that set up, email everything, you'll get to see this information. Oops, okay. You'll get to see your login, your reporting page. And when I click on this page, you're going to get all the information based that your account, based off of your account. The balance, equity, floating profits, if you have anything open, any closed profits, margin that's free, margin to use, level margin, margin levels, account type, or whatever. Your total return, monthly estimated return, weekly estimated return, and this is only estimated because I just started this trial account, but you'll actually get your return, monthly and weekly returns, once you've traded past this point. So I only say estimated because I just opened up this little demo account. Your win percentage, profit factor, the number of pips that you banked, and the number of trades per day. Um, then your risk reward ratio, worst day, worst week, worst month, risk to ruin, um, trade length, average results, average loss, and average win. And then alongside that, you get, analysis about the trades that you've taken, any orders that you still have open. And then under stats, you can dive a little deeper into that as well, right? You can see number of days, number of weeks, number of months, and the number of total trades that you've won or lost. And you get to see all of the data about best, worst, best sequence, best series, worst series, winners, losers, all trades, right? You can go even deeper, seeing like what your closed profits compared to open profits are, what symbols you've traded. And this is important because you can get the information. Let me see if they still have the demo account up. That one's going to give a little more. They used to have it like a little demo. Okay, this is the demo. Now, this is going to give you a lot more information about your account. So like this person, looks like they started out with 5K. The account went up in profit up to $157. They took a big series of losses, and it dropped their account down to 4,491. They almost got back to break even right here. Took some more losses. Almost got to break even again right here. Took some more losses and went back down to around that same dip, right? So you seeing this, right? Just this can tell you, right, like what you need to do in order to get back to break even on this account, right? You need to cover this peak, this valley right here. You need to cover this. So you already know you need to work your way back up to this point to know in order to get to break even. Aside from just knowing that, all right, I'm down whatever the amount of money, $474.34. You can actually see like, okay, I took these trades on these. I took trades on these particular symbols. My total return is I'm down 9.5%. My monthly returns are -1%. Weekly -0.3. My win rate is actually pretty good, right? So combining all of this with your grading, your setups, and I'll go back as to how you can merge this, but I know I'm winning at a decent rate. I need to figure out what I need to do to improve my results, right? And just looking at this, these three numbers are numbers that I probably need to consider, right? My average result is I'm taking too many scratches, right? Or I'm not closing trades out because it looks like he's in profit at some point, and then he's closing it out or letting it hit stop loss, or he closing his trades out too early and hanging on to losers too long, because he's only bringing in an average result of negative 1.48. But his average win is $7. So this $7.92, you want to flip these numbers. You want your average loss to be 2 times less than your average win. So these should actually flip. This is 5 times more than he wins, right? This 38 is almost 5 times more. His average loss is 5 times more than his average win, right? So he needs to flip these numbers, right? And now, if we go into analysis, we can see he's taking 119 trades on Euro CHF, Euro GBP 98, Euro USD 38, and USD CHF, right? The only one that he's profitable on is Euro USD, right? Net profits of $277.56. The next best is USD CHF. He's pretty much at break even on trading this pair because he's only negative $24.47, right? And those two actually have the best, he actually has the best winning percentage on these two. So, but on Euro GBP, he's taking the most losses, the largest losses on, right? And he's lost on Euro CHF. So this is kind of giving you some direction on some decision points that you can make, right? You can take this info and say, I should probably trade Euro GBP a little less often. I should trade Euro USD a lot more often because I trade Euro USD a lot better than I do Euro GBP. I can keep trading Euro USD CHF. I can kind of keep trading Euro CHF, but I probably don't need to trade Euro GBP much at all, or at least lower my lot size on Euro GBP and keep my lot size up on Euro USD because I trade that much better. And you can already see, like, he only traded 38 times on Euro USD, but he traded 98 times on Euro GBP. Why do you think that he has less trades on this, but more profit on this, right? We can go in the stats right here. If it'll come up. Stats. Hmm. Not sure what's going on. Once you get your account, like, this won't happen, but we'll go back over here. None of this working. Okay.
Mine is working.
Yours is?
Yeah, mine is working.
Hmm. Let me try to open this in Chrome. Oh, there we go. This page just not working. Okay, here we go. So again, we got this data, right? 94 days he's traded. No, I'm sorry, 94 days he's won trades, 36 days he's lost. 24 weeks, 13 weeks he's lost. His months are leaning towards the losing side. But overall, like everything is showing he should be a winning trader, right? He's got more days that he's won, more weeks that he won, but less months. He's traded altogether 320 entries, and he's won 254 out of 65. These numbers make sense for him to be winning. You know, he shouldn't be down, right? So we can kind of go into more detail, right? We already seen the symbols. We can see his winning percentage on Euro CHF is 71, Euro GBP 78, Euro USD 92, Euro USD CHF 89%, right? So it's still lining up. So we need to see further like what's going on with why this person and why you would be having a losing account. You know, like these are the same questions you would need to be asking yourself, right? Now, direction. He buys better than he sells, right? So when he's selling, he's losing the most money on selling trades on his sales setups. So he needs to go back and make sure that whenever he takes a sales setup, that he grades his trades better. He makes sure that his catalyst is good, his setups are followed right, his risks are worth it, and there's obvious targets, right? And once he understands that, he can say, all right, I am going to be risking so 0.25 lots on this trade, because on this trade, this is probably going to be a B setup, right? If he does win or lose this, he can say that he's done all he can do or she can do in order to determine whether or not this was a good setup or a good trade to take, right? So now we can go into the symbol direction, right? Buy and sells on Euro CHF. He's buying better on CHF. On He's buying better. He's losing. Again, grade my sell setups better, right? EG, right? Buy and sell. He's losing both sides. So that means anytime he take a setup, buy or sell, he needs to look and review whether or not he's trading an A, B, C, D setup on this, right? Because he's losing in both directions, buy and sells. So something he's doing on EG is not right. Something he's not seeing something on EG, right? On EU, right? He's buying and selling just as well, right? He's selling better than he is buying. And with his buys, he's about 2 to 1. Yep, he's 2 to 1. But on his sales, he's 7.5 to 1. So whatever he's using to consider his sales setups, he's trading at 7 to 1, 7.5 to 1 risk versus 2 to 1 risk on those setups. But overall, he's trading like he should on Euro USD. Euro CHF, he is smashing it with the buys, right? He hasn't even lost out of the 11 trades that he's taken on Euro CHF. So right now, if he grades his trades with proper risk, the best setups that he should take are sales on Euro USD and buys on USD CHF, because he's managing those the best out of everything, right? He hasn't lost on UCHF, and he's only taking a $28 hit on Euro USD for his sales. right? But on USD CHF, he's also lost on pretty much half and half. Well, now he hasn't lost. Yes, he has. No, he hasn't. He's actually won his trades. He's just not, looks like he's just not holding on to the trades long enough, or he's risking too much on these trades, or he is going into profit and then letting it come back to hit his stop loss. So we'll have to dig a little deeper onto this. Let's see. So his average win on the trade is $11. Average loss is $99. Average trade is -2. Best trade was 24. So his losers bigger than his winners. You can see that right here. Longest trade, 17 hours. Shortest trade was less than an hour. Average length, 2.8 hours. Average pips, 256. Average pips lost, 319. Net pips, -63. Profit factor, 0.8. Average pips won, average pips lost. Average pip per bank trade, that's negative. Average lots traded. So we can already see right here. For this pair, he's trading with too big of a lot right here. Same thing for Euro GBP. For Euro GBP and Euro CHF, he's taking lot sizes that are way, way too big. All three of these, 1, 2, 3, way too big, right? As compared to the rest of them that he's winning on, his lot size look a little normal compared to this 15 lot, 10 lot, and 11 lot. So if we go back over, so that's 1, that's the third, that's the second, no, that's the fourth, second, last, all right. Second, right? Net profits, -69. He using 10 lots on this. Over here, he using 15 lots on this. And over here, he using 11 lots on this. So anytime he trades big, he's losing because he probably getting scared out of his trades, right? He probably not even taking bad trades. He just getting scared out of it. And you can tell he not taking bad trades because his win rate is 78%. Here, over here, his win rate is 70%. And then over here, his win rate is 87%. So that means that he is taking lot sizes that are too big. And as soon as he see drawdown, he just closing the trade out. And the trade could have went in the right direction, but he was in so much drawdown from taking too big of a lot size that he wasn't able to stay in the trade to see it all the way through because he was nervous that he was going to take a even bigger loss. So he just closed the trade out ahead of time, right? And we can tell that by simply seeing some of these things, right? Well, where were we? So you can easily see that by seeing and analyzing this stuff, right? His lot sizes, right? By simply analyzing this little stuff, you can learn about your trading style, trading habits, bad habits, good habits, what you need to change. Then when you're looking at, when you're looking at like, what do you need to do if you go into some bad streaks, some losing streaks, right? This is the next thing that this is what I used to do. That some of this stuff I'm telling y'all, I used to do this, and this was when these are things that I did when I was making the most money when I was trading, and I stopped doing them, right? And my trading was good, but it was fluctuating, right? But when I was doing this kind of stuff, I was like, I could tell you everything about my account. I could tell you every bad habit I had, good habit I had, and I was able to maintain it more because I was analyzing and reviewing this all the time, right? And so if you are having a bad month, right, go back to the monthly section, right? Look at your numbers here in percent change, right? And let's say we're in whatever month this is, right? You can kind of gamify it, right? Treat it like it's a game. So if I'm down 7% this month, 0.7, 0.5, 5.1, 3.8, I'm up 1.5% here, 2.4 over here, up 3.9 over here. How is it my account overall is down negative 1%? So how do I come back from that, right? And I'm looking at the monthly, right? So you need to aim for your next month to at least take out the lowest percent on this chart, right? So going into the next month for this person, which would have been May of 2010, your goal for the next month should have been to take and replace this negative 0.5%. That's your first goal for the month. That's how you can say plan out like what you should be looking at for the next month. So going into May, your first goal should have been, all right, I need to knock this negative 0.5 off the board, right? And once you do that, you look for the next lowest number. All right, my next target is to take this negative 0.7 off the board. If you did that alone for the next month, you would actually be back up 1.2%, 1.2%, just by taking these two off of the board, right? Then you're gonna go back and look for the next one. All right, this one, these two, I'm up another 1 point. I'm up another point negative. I'm up another 1.2%. So I need to see if I can take this negative 3.8% off the board. That would have been your next goal. So for the up and coming month, that's how you would approach everything. Take this off the board, take these two off the board, and eventually take this one off the board, take this one off the board as things go on. And you can break that down into your weeks just the same way, right? So scrolling down this percent list, this day he lost 3%, 2.8%, 3.5%, 2.1%, 3%, 0.5, right? Going into the next week, after this should be your first target. And that target is a negative 0.2, negative 0.5%, right? And that's only $22.41, right? When you're in a hole, this is how you get out, right? You find the easiest number you can take off, right? I could take this 0.5% off and knock this $22.41 off the board, right? You should be able to do that, right?
Hey, Corey,
Huh?
I have a question. Like when you are saying like this is 0.5% is lesser one, and next week my target should be to remove this one, right? Then it means I have to means I cannot remove this from the list, right? But I need to increase my percentage, right?
Yeah, you just need to replace this number. So if I got a negative
How
0.5 here,
how can I do that?
not so much physically replace it, but right, the next
No,
week.
not physically. Like I need to means this is the data. Whatever I did, this is report card, right? So now
Mhm.
now I have to improve, right? So like next week, suppose my target is like 5%. I have to make 5%. So I need to add this number. Means zero point
No,
0.5.
no. All I
Huh.
say when I'm saying add or take it off the board, I just mean to say make profit to cover this.
Okay. So it means next time, whatever my target, suppose my next target is $100, then my target should be 125.92, right? Then I'll cover
Right.
that, right?
Right. So what essentially you're not going to try to erase
Yeah, yeah.
if you lost 3.5% on this day,
Mm-hmm.
don't go in the next day thinking that, oh, I'm going to make up that 3.5%.
Mm-hmm.
Try to take out something smaller first, right?
Okay. Got it.
So if you lost 3.5% or whatever this is, 2.5% on this day,
Mm-hmm.
and even if you have a bad day, do you think it would be easier for you to make up the 3.5% that you lost on this day or this 0.5% that you
Obviously,
lost on this day?
5%, right?
Which one is easier?
0.5.
All right. So the next day, your goal is to look at this list and say, all right, I'm going to look at these. I just had a losing day. I'm going to at least take off the $22. I'm at least make the $22.41 that I lost on this day.
Mm-hmm.
I'm
Got
not
it.
going to try to take,
Bigger one.
I'm not going to try to win the $139.40 I lost on this day
Mm-hmm.
because that was a 3% loss.
Right.
That's going to end up putting you at a 6% loss, trying to get back the 3%,
Yeah.
right?
Yeah.
And that's usually what happened, right?
Mm.
That's usually what happened to everybody. When
Yeah.
you're trying to make up a 5% loss, right, on that you took on this day, you'll end up losing 2.5, 2.9% like this person did right here.
Yeah.
They had already lost this 5.5, 5.7%. The next day, they went in small, but on this day, they tried to get back this right here
Mm-hmm.
instead of just building it back over time.
Yeah.
And they never really recovered after they took that 5% loss because instead of them taking a gradual approach,
Mm-hmm.
instead of them taking a gradual approach, they started increasing lot sizes, increasing lot sizes, and instead of getting and chopping this down over time, they just started to lose even more. You see what I'm saying?
Yeah. I understand.
Just started to lose, right? And see, they had a string of after they took this 4.5% loss, right? So you had the 5.7% loss, you had the 2.9% loss, 1.7% loss, 4.1% loss, right? They never strung a string of trading days where they were consistent after that, right? So that's why I say go on this, your percent, find this. All right. I'm gonna start with this one. I can get today, I'm gonna at least get this 725 back, right? The next day, right? I'm gonna at least get this $1.75 back, right? I'm gonna at least get these $17 back. I'm gonna at least get these $34 back. By the time you do that in a row, a couple times in a row, right? you would have at least made back this 1.4%, right? So not only did you take these small ones off, but you totaled up to take this 1.4%, this 67. You traded back up to this 64. You taking this off, right? So if I'm confusing anybody, or does this make sense to everybody?
Yeah, it makes sense for me.
What about the rest of y'all?
Yes, it sure does.
Okay. Is this something that you guys think you can implement and understand?
100%. I thought it was my information at first.
Yes.
It's so accurate.
You thought it was what?
I thought it was my info at first. That's how I started. You know, you would lose a trade and you would try to make up for it. And the percentages would play against you, you know, because it's a mental factor. And so just tracking the information plays a major part. What gets measured increases. And, you know, we tend to skip the vital details, but truth be told, at any business, at any job, 9 to 5, they are tracking every increment of your work. What time you clocked in, how late you were, when you arrived early, what months were your most productive, what months did you make the most, what needs to be improved. And then they have meetings on that to measure if you're a great employee or not. And if you're not doing well, you get cut. In this case, if you're not doing well following these factors, you lose your account, you lose money. So it's the same thing. So this is great.
Exactly. And that's the exact approach. And that's the exact thing that you guys and myself got to take out of this. I stopped doing all this, right? And I took my biggest loss, and I didn't have no way to really capture any of this information. I was doing this in my head, you know, and you cannot do this in your head. You cannot recover from a big loss by just winging it, right? You cannot make good trading decisions by just winging it, right? And the only way you can really like come back from a loss if you're able to have quantitative information, numerical information. You got to have KPIs, right? Like that's what you hear at work all the time. What's your key performance indicators? What are your you know, how can you grade or engage how much work is being done or how many trades you need to replace or make up if you don't know the data to do it, right? So you got to treat this just like you treat a job, right? You got to know the numbers, right? I did this session before a long time ago, and again, like I said, I got away from it for quite some time, right? And you can do this, you can trade without doing any of this stuff, but the better traders, the best traders, like they're doing this all the time, right? They are journaling, they are going back and looking at numbers, right? You need to have this open right along with your chart so that you can come back and look at this every single day. Because if you don't know how to make the next best decision, because you don't know that if I want to come out of the hole that I've got in over here, down here is where he currently is. How do you come out of that? You know, you can't just go in like guns blazing, right? And thinking like, oh, I'm just gonna just put in a 10 standards like he tried to do, and then one day I'm gonna have a good day and all of this is gonna get erased and I'm gonna be back in profit, right? Or because you see when he tried to do it, right? He took these series of losses right here. He probably upped his lot size over here, started getting scared, lowered them. He started winning again and thought he was about to get above the 5,000 and back in profit and raise his lot sizes and then lost again. That's exactly what happened. And he probably didn't know that he shouldn't have been trading Euro GBP if he wanted to recover those losses. He probably didn't know that the pair that he traded the least is what he should have been trading the most in order to get back to break even. So when you're grading your trades, that's going to be able to help you to determine, like, okay, this is an A setup because in this case, I am in the trend of the market. That's another thing. Are you in trend in the market? I'm trading with the trend. That's already letting you know I got an A setup. I'm going to be, if I'm going bullish, I'm going to be looking for the next bullish opportunity, right? Do I see my favorite setup? I always like order blocks. So I'm going to be looking for bullish order blocks, right? So for me, an A setup is I'm looking at I'm in the trending market. I got a bullish order block. I got some kind of catalyst, and I'm technically seeing like chart patterns. I see the chart pattern I like. I see a wick rejection. For me, there is news that could drive it in a certain direction. In this case, I would be looking for positive news, right? My risk, I'm going to probably use the bottom of the order block as my risk. And I am looking at obvious targets. So I would answer the risk question. And that would have made an A+ setup for me, right? Now, a B setup, an example of a B setup, right? I am with the trend, right? Maybe I'm with the trend, but there's no news, right? Maybe I'm seeing a break and retest setup, right? But I don't prefer break and retest, right? My risk is going to be a little off because if I'm trading a break and retest, I'm probably going to have to use a bigger stop loss. So my risk won't be the greatest, and there's no news, but technically I do have what I need to see to take a break and retest, right? So something like that, it would give me a B setup, right? I don't mind trading break and retest. I just need to see everything else related. Like maybe for me, a good break and retest with an A setup would have to be there's news with it, right? If I wanted to make this B setup an A setup, I at least probably needed to see news. But you could have been looking at an area of structure for a break and retest in the trend, and it's technically together. But let's say it is London, right? Or Tokyo, right? That makes that a B setup for me, right? So I wouldn't necessarily want to take this break and retest setup with the same lot sizes that I would do if this had news and that it had time of day. That's another thing, time of day. What session is this? What session are you trading in? For your setup. That's important because you also need to know like what session that has the setup that you look for, and does that session that you're in usually give you a high probability for your setup to go through, right? If you like a break and retest, and you and I all know that it's usually consolidating during Tokyo and Sydney session, right? So taking a break and retest during that time what's likely to happen during that time? A fake out, right? Or even if it's not a fake out, you probably don't get the full move, right? You probably get only hit TP1, right? You might only hit TP1, or you might get faked out and hit stop loss during that time because it's just ranging, right? But if you take the same range as it gets closer to London, it breaks out in either direction. Not only are you hitting TP1, you're hitting TP3 and 4, right? Or it ranges and it comes to New York session still in the range and it breaks out, because those are the times, New York and London, when you have the most volume, right? So you want to consider that as well, right? That's what makes that, more of a high probability setup, right? That makes the grade on that better, right? Or a C setup, right? A C setup would have been, you know, just like I described. Time of day is, maybe I'm trading with opposite of the trend, right? So on this setup, I'm opposite of the trend, but it's coming to an area where I know it might need to go to in order to move back into the right trend. So I'll at least take this to get down to the area that I think it could go to, right? A good example of that would be this, like you taking this, right? Right. If you take this break right here, you can kind of say, like, I should at least make it down to this area, right? Is it the best setup? Not really, because overall, this is going up right here. This move is going up, low to high, come down here. We should expect rejection down here. But if you were taking it from here to at least to get down to where you think it could reject from, that's a good trade. But you also got to understand that it's a possibility it could reverse. So you have to know, all right, if I do take this trade, I need to be getting my money, out. You know what I'm saying? I need to make sure that I'm taking my trade and using stop losses and using targets as properly, right? Or the example that I gave you over here, when I took this trade, right? This was probably like a BC setup, but in my case, we had been selling off. We were oversold right here, and dollar was at a high, right? Dollar was here in the middle of this fair value gap, and it had already sold 1, 2, 3, 4, 5, 6, 7, 8, 9 times. My assumption here was that we would at least get a small sell-off, right? And we did. That's the trade I took. It was against the trend. There was news, and we had correlation, right? And we had chart setups. Like, I like this. We had just swept this low over here. So with us sweeping that low, I know I should at least get a pullback. And in this case, here was my obvious target. So I had like a B minus to C setup on this gold trade. The A setup on the gold trade was taking it from up here, right? Taking it from up here, right? You would have had your risk reward. If you took the break, this would have been your entry. This would have been your targets right here. 8 o'clock, 8:30, as soon as the news was released, that's when this candle broke, right? That's your A plus setup right there. And you would have hit obvious targets If you go to the 1 hour, you would have seen that you should at least been able to get, once this broke, you should at least been able to come down here. And then if it pushed below that, you would at least been able to get the monthly. If it pushed below the monthly, at least been able to take this low out. So those were your obvious targets on that. So the sell was the A plus setup. This was really like a C setup, but again, I only took this because dollar told me I could. So, um, so yeah, I think that's about everything. I think that's about everything. An example of a D setup, you don't even really want to take. You don't want to take D setup. Honestly, you don't want to take a D setup. A setup that's a grade a D, you are probably just jumping in the market. Like, let's say you didn't really analyze this. Maybe you want to sell it from here, right? This doesn't really have, you see it selling off, it pushes it up here, and maybe you sell it from here. There's really not a catalyst for you to sell it right here, other than the fact that yes, it's still dropping, but where is your logic for selling it right here, right? There's not a lot of logic into entering a trade right here, even though it did work out. This would probably be an example of a D setup for me, right? Like at this point, the move had already happened. Me trying to sell it right here, when if you took this trade, where is your stop loss on this? You would have had to use here or here. Well, 3 places. If you took this trade at the very top, you would have been able to use a tight stop loss, like maybe somewhere around this area, right? But taking it from here, right, after you got confirmation, your stop loss would have had to be here or here or here or here, right? Really, really big stop losses for this trade. And that's not how you want to take a trade, right? If you took it from here with the intent of selling it back down to, I guess you would say back to the low, right? Now you're looking at best case stop loss here, right? That it would have been 24 pips, right? But if this didn't work, your stop loss is now looking at above this wick, right? Now you just went from what was a 3-to-1, almost 4-to-1 setup to now right here, you at a 1.71 to 1 setup. And if it had pushed up here, now you're looking at a 1.33 to 1 setup. If it had been all the way up here, now you less than a 1. You less than a 1 to 1. So you would have been risking more to gain less. And you don't want to do that. That's an example of like a D setup, like where it could put you in a situation where if you got in this trade right here and it pushed up past this, you would have had to be like trying to adjust your stop loss. You would have been moving your stop loss, trying to protect your trade all at worst case up here or even above this last high, right? And now moving above this last high, you at negative 0.73 at risk reward, right? So you would have been risking way more to gain way less. So Yeah. So that's it. That's what I wanted to cover for y'all today.
Hey, Corey,
Yeah.
do you know when you were giving the example of the young man and you were saying that he took a trade and even though the trade kind of went in his direction, that he still wound up losing? Can you tell me why that happened? Did that happen to me yesterday?
Well, like for this person, in his case, if we look at the symbol and direction, right, you can tell what he did, but by looking at the lots he traded, right? So for him, he probably he loses on this pair and this pair the most, right? And he's taking the biggest loss on these three pairs right here. This is Euro. Let me see, what is this? Euro CHF, Euro GBP, and Euro USD CHF. What he's been doing on this particular trades is his lot size have been way bigger than he normally would trade with. So the rest of these is what it is: 2.4, 4.98, 2.4, 2.59, 3.44, 2.44. So he averaged probably somewhere around 2.5 lots per trade. Anytime he increases lot size to above that, he losing those trades. So what it's saying is he's entering trades and he's probably closing the trade out early because he sees he's in a certain amount of drawdown and he don't feel comfortable being in that size of a drawdown. So a lot of times what you'll see with somebody that's doing this is they're trading without a stop loss, or they don't trust the stop loss, so they close the trade earlier. Did you do any one of those?
No, I didn't. I didn't close the trade early at all. And then when I checked back in with the trade, I was in the negative, but it was going in my direction. Does that make sense?
There's no way that could be the case.
Okay, so it was on Euro USD, and I saw what I thought was a head and shoulders pattern. And I went in, I entered, I looked at the chart on the 4 hour, the daily, and then the hour, and I entered on the hour. And then by the time it came back, it was going in my direction. It was just negative.
You mean at some point it was going in your direction and then it went against you?
No, I entered as it was going up because I knew it was going to come back down. Does that make sense? Like I thought I was making an ultimate, like the best entry ever because I knew that it was going up to crash. It was a pullback.
So you knew it was going up because you thought it was going to sell off.
Yes.
So did you sell it?
Yes.
Okay, let me see something. So Euro USD.
Mm-hmm.
Euro
Yesterday, starting at 10 o'clock on the 1 hour.
Starting at 10. That's right here. This is 10 o'clock.
Mm-hmm.
The trade.
That's exactly where I entered.
The trade went up higher.
Yes.
And then it sold off.
Right. But I stayed in the negative and I still don't understand how. And then when I checked back this morning, I was at negative $9. And I know that's not, that's probably sound, like I should not be panicking over that. But I'm still trying to figure out how did it go into the negative?
Because
Because
Uh,
what?
you didn't close out your trade. The
Where
trade,
should I have closed it out at?
um, it would have just depended, right? Like I don't know what you were looking at. Like so, around 10 o'clock,
Mm-hmm.
price is around here.
Yes, that is where I entered.
Around 12 o'clock, it already puts you in the negative right here.
I think I know what it is, Corey. It's about her spread. If she entered when that was buying, they would have given her a spread that's higher than what she thought she entered.
Nah,
And
that's
so, or I'm sorry, or even lower.
nah. She stayed in the trade too long.
Okay.
Because
But
if you're saying that you got in this trade at 10 yesterday
mhm,
to 13, you check
yes.
back today at what time?
No, I checked it. Okay, so I set my take profit and I set my my stop loss. I stopped looking at it because it stayed in the negative, even though it should have been blue. It stayed there the entire time. So I got mad and then I just said bump it. And then I looked back at it today and it said -$9.
Right, right. Listen to what you're saying, right?
Mm-hmm.
You got in this trade around 10 on
Mm-hmm.
the 13th.
Yes.
This is around 10 on the 13th, right here. It started to sell off.
Mm-hmm.
You walked away and
Mm-hmm.
it went back up against you right here.
Yes.
It went back into profit right here. If you were still in the trade today,
No, Corey, I closed out yesterday. Go over like 2 or 3 more candles. Down, 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 down. About there. Yeah.
what were your exact numbers?
I'm not in the house. Let me see if my phone will come back on. I'm using Donovan's phone. I'm sorry.
Okay.
It's still loading. I'm sorry.
That's okay.
Okay. Sorry. It moves very slow.
It's okay.
Okay.
I'm just curious to see what happened. I've never heard of that before.
But I promise y'all that's exactly what happened.
I think that you might have just
So I entered at, okay, hold on. Sorry. I entered at $1.12. Okay.
what's the whole number?
Okay. 1.12887.
1.12887.
Mm-hmm. Yes. Mm-hmm.
What was your
Mm-hmm.
stop loss?
Hold on 1 second. My stop loss was right above that other candle to the left, and it is at 1.12941. But I didn't have a physical stop loss. I did not put it in there.
What was your target?
My target was 1.12753.
1.12753.
Yes.
And you are saying
I
Did you have
promise you that's what happened. I called Christine and everything.
and you still end up losing the trade, right?
Yes. And I don't understand what I did wrong.
This candle took you out right here. That's all that
Oh.
happened. This candle took you out at 4 o'clock in the morning.
Oh.
This is the candle right here.
Okay.
And if you were saying that, so you never put a physical stop loss in.
No.
Even if you went to-
I'm trying to get back to my MetaTrader so that
Question: Did you manually close the trade out yourself?
yes.
you manually closed it out.
Yeah. I closed the trade out myself because I got mad. I was trying to figure out how I went so wrong. I closed the trade out, and then this morning I came back to like check on what I did, and it still says negative $9.30. I wish I could explain this better, but I
So
can't.
the only other thing is if you're saying that you manually close the trade out,
I
are you
did.
sure that you closed the trade out?
Yeah. It said close.
But when you hit close, you actually have to hit it twice.
No.
So
Then I didn't do that.
yeah, I don't like there's really no other thing that could happen. Like if you saying like what time on your phone does it say that you closed the trade out?
Where would I see that? Because I'm clicking on the trade now, and it says at 18:01. I don't know what that means.
1801 is when it says it closed.
Yes.
That's here.
So
Right?
I should have been in profit.
Okay. Now, that's when it says it actually closed out the trade.
Yes.
1801.
I wish I could have called you yesterday.
And when you are looking at this, right, and it
Mhm.
says Euro USD sell.
Yes. It says Euro USD sale 0.31. Okay. Then it says my 1.12749 to like the arrow signal to 1.2774. All right. My stop loss.
Hang on. Give me the number. Give me those numbers again.
Okay, so it says 1.12749 to 1.
2749 is the
Uh-huh.
entry.
Yes.
1.12749.
749
Okay.
to 1.12774.
That's the stop loss or the take profit.
That's my take profit.
Tell me that again.
1.12774.
1.12774. Okay. Your stop loss again was what?
According to this, because I thought it was a different number, 1.13157.
1.13157.
Mm-hmm.
Look at this.
I'm looking.
So I'm gonna make sure I'm getting this right. Your entry
Okay.
is 1.2749.
49. Mm-hmm.
Why did we keep going to 5, 4?
I don't know how to. I'm just gonna
Hang on. I just want you to see this, right? I'm gonna make
Okay.
your stop loss, I mean, your entry again is 1.2749.
Yes, that's what this says. I thought I entered at a different price though,
You
because I was going
closed
off
it,
the trading view.
you closed it at 1.2774.
774. Yes.
All right. So I want you to see what this just does.
Okay.
774,
Mm-hmm.
meaning that you closed it above the entry.
Oh.
Your entry is 1.2749.
Yeah.
Closed it at 1.2774.
No, I didn't intend to do that at all. I don't even know how that happened. No.
So you just said this, right?
Okay. I'm going to mute myself because I'm walking in the house now.
Let me show you what you did. This is your entry. This was where you closed out. This is what you thought was your stop loss. I guess right here. I don't know where you thought your stop loss was, but I'm just going to assume that you thought it was up here. And I'm going to assume that this was your target.
Yes, that was my target.
Do you see what you did wrong? See what you did wrong?
No, can you explain it to me?
What the hell?
Oh, I see what you're saying. You said I closed out above where I entered at.
Yep.
How on earth did I do that though?
You said you got frustrated. So that's the first thing right there. You already said you got frustrated because it didn't do what you wanted to do. So you just randomly closed it out right here, even though you entered here. That's why you down $9 at this point. You probably saw that you wanted to enter up higher, but
And I thought I did.
Entered, it was already down here.
Yes.
So you might have intended to enter up here or up here, but by the time you actually entered the trade, you were here at the entry.
How? Okay.
I mean, you're the how.
No, what I'm saying is I entered exactly when I saw it on my trading view. When I saw it on my trading view, I hit the entry because I knew, I said, okay, well, this is definitely a buy to sell, right? Then I saw it buying up. Okay. Then I saw it falling. I saw it selling back down, but I actually stayed in the negative the entire time.
Yeah, because when you bought it, I mean, when you sold it, it immediately pushed up higher. And
Mhm.
and as it was pushing up higher, and you closed it out at 1800, which was around here,
Mhm.
these areas, it finally came back down close to your entry and you just closed it out.
Okay.
So you were actually in more drawdown than you thought you were.
I was trying to do what you guys said about like the perfect entry.
Not this time.
Okay. Well, thank you.
Uh-huh. Okay. I think that's about it. Anybody else got anything?
Thanks a lot, bro. I like to share a little bit.
What's up, bro?
Just a little something I picked up, the little gems I want to drop on the team. Can I grab your screen? Let me put this up on my MacBook.
You should be able to now.
Let me close up my phone. Make sure I can hear me. How do you open this up? Mute. All right, can y'all hear me? Hello?
Yep.
We can hear you.
Hello, can you hear me?
Yep.
So what we got? Hello?
Yeah, we can hear you, bro.
Corey, can you hear me?
Yeah, we can hear you.
Oh, God, what's wrong with it? Hello? Mic check, mic check. Can you hear me now?
We can hear you just
We can
fine.
hear you.
Oh, geez, it was my bad. Sorry about
No, you're okay.
that. All right. So this is some small gems I picked up. I'm gonna erase this so you can see exactly what's going on. Something I was working on. Erase everything. All right. So a couple tips I picked up from. I'm basically jumping from basic to advanced. I'm kind of late, so I'm just jumping onto the new charts and everything. So there's like a boot camp. And so I kind of dug through a couple of these things and I picked up a few gems I want to share with you guys. It's a couple of tips and tricks. So you definitely want to take notes of this. This is the actual video that I was studying. So it's inside the academy. And so here we are, and these are the notes. So you have a couple of things that's very unique. One I find is how to put your time frames up here at the top like this, where you can just click in between the time frames. That's your favorite. That's kind of key. You simply just click your time frame. You want to put a star next to your favorite ones. This is good. You know, you want to be able to move quickly in between your time frames. That's one little small tip and trick. When I'm basically switching in between charts, something like this, going back to US 30, it zooms out. Or let's say I'm back testing and I'm on, let's say the 1 hour chart and I'm way back here, right? And I want to zoom into this one little area. Okay, so in the past, I would have to do all this right here, all of this, just to get into this one area to see what's going on, right? So this tool right here, if you simply click and hold it and drag it down, it zooms right into the area for you. Boom. It's real quick, real smooth. I think that's very unique for back testing because that's how we enter the trades, and you want to be able to get back to where you are without doing so much, hard work. Let's take a look at this drawing tool that's extremely important for a lot of reasons. I'm gonna share that with you now. So let me go back to US 30 and I'm gonna show you how I caught this sell today. Literally with $0 drawdown. It's off one of these tools that's in that training video. It's right here. This magnet tool is, let me highlight it so you can see what this is. OHLC. All right. So what is that? That's the open, high, low, close chart, right? Long story short, it's basically going to show you the period of time where price was opening and closing of the stock market, same period of time. Or you can look at the highs and lows of this price within this particular stock. Long story short, this shows what we call our support and resistance. If you select this tool, in addition to this stay and drawing tool, first of all, what is this stay and drawing tool? If you're marking up your charts and you select horizontal line and you simply want to draw nothing but horizontal lines, when I click that, in addition to horizontal line, every time I click my mouse, it's going to drop a horizontal line. So I don't have to keep going back and selecting it. Boom. So let's erase this. If you select this tool, in addition to this magnet, which is OHLC values, right? In addition to my horizontal lines, I'm going to start on the daily time frame. Now, this is very important for learning how to mark up your support and resistance zones, because I struggled with that as a rookie. Corey used to help me out, you know, just trying to figure out any basic stuff. So we've got our lows and highs, but let's say you're on the daily chart and you want to mark up your support and resistance based on the professional institutional levels. Select the horizontal line, and I'm going to go in between here, and you're going to see that start to snap. You see the prices here, you see it snapping, and I'm not even there. Guess what that is? This is basically a dog, what I call my dog. All right. It's like it's searching for something, right? It's searching for those opening, high, lows, and closing prices. So when I click my horizontal line, now I'm going to label this because I'm on the daily time frame. I'm going to put this as a D, which lets me know this is a daily support or resistance zone. All right. Let me draw this again. Here's the horizontal line. I've got my magnet tool and my staying drawing mode. I'm just going to pull down in this area to find it. You see how it's snapping? It's snapping to a particular point, right? That's letting me know right here is another support and resistance zone. Look at that. If I stroll to my left, this is all time high. So let's go further down. I'm just going to continue low. I'm going to do this quickly. Just keep going. Right there, snapping. It just snapped right there. See, I'm up here, but it snapped to that point. So just click it. It's going to draw my horizontal line. These are daily zones. The red is for daily. Just move your cursor within that area. Boom. These are institutional levels. Look at that. I'm not making this up. Watch it. It's just going to start snapping once you get in that area right there. And let's move down a little bit further. Let's see if we got something over here. Okay, what you got? Well, let's run the dog right here. Boom. Now, these red lines is my daily support and resistance. I only want to do two, daily and also 4 hours. I'm going to show you why. This thing is nuts. This thing is absolutely nuts. Watch this. So on the 4 hour, I only want to do maybe 1 or 2 of these lines that are institutional. I can draw my own support and resistance, but I want theirs. So this is green. So I'm just going to double click this. And you can go back and list your own labels and stuff. But just for time frame, I'm just going to list one of these lines each. So you know the red is daily, the green is 4 hour support and resistance. Let me see. I'm just going to move this here and just find it. This, you see it snapping? Look at that. Where we at? Right here? Okay, let's get it. It's snapping to grid. I'm not even moving this, guys. Why you see it move? It's jerking like that. When you move your cursor, when you have this snap, if I just take that off right now and I move my cursor, it's gonna move smooth. But when this magnet is on, it's looking for the institutional levels. Right here. Okay. Let's see if we got something in here. Okay, I already got that area. We good. Let's keep going down. Let's get something in here. Absolutely. Snapping to grid. It's snapping. You see it? Okay, we got that already. We got that on the daily. That's the this red line is already marked. So Look at how it snaps back when I get to that area. It's a real hot zone. All right, so I just want something in here, right here. You sure? It's just like a dog. All right, it's searching for the zones for me. All right, now let's drop down to the 15-minute. I'm gonna show you how this works. This is how I caught my, oh, sorry. I'll do that twice. Take the magnet off, take the drawing tool off, select the moving tool. This is how I caught the sell this morning. So on the 15-minute time frame, these lines are going to be blue. And I only want to draw a few of these. Take that off. Coming down, boom, there's one. It's just snapping to grid. I'm not even moving it. It's just when it gets to that zone, it's going to let me know this is where I'm at. And just to let you know which color this is, 15M. Blue is 15-minute, red is daily. Let's go back. Let's get the dog. Let's go. Where we at? Right here? You sure? Okay. Where? I don't want to get every zone. I just want to get the main ones. You sure? Right in here? Where? Come back. Come back. Where we at? Right here? Okay. See, I'm up here, but it snapped to the area down there. You see that? It's snapping. This is institutional levels. Let's continue down. Let's stop right here. All right, now let's zoom into this. Now, here's the beginning of the sell that happened last night. What is this? Daily support resistance, right? Where did it go to? Look at that. What's red? Daily. In between, what do you got? You got green, which is 4 hour, right? We had one. That's where the price bounced up at. Look at this. These are institutional levels. If I take the 15-minute and take the dog and drag them across here, we got zones in here. 15 minutes, what color? Blue. Get quarter point everything. This is extremely important to know what their levels are. Look at this. Let's find it. Where's he at? We'll find it. Right here? You sure? Okay, let's drop it. Where else we got something? You sure? Right there? Okay, right here? Let's see, right here? Boom. Okay, let's look at that. Okay, so inside the zone, I know we got something up here. Let's get this dog back out here. Oh yeah, right here, we good. All right, so inside the zone, it dropped down from the daily support all the way down to the 4 hour, which is the green, right? Kind of consolidating that area. Every single touch was an institutional level. Every single touch. This is the 15-minute. Look at that support resistance zone. This is actually resistance here. Resistance, look at that. Boom. Resistance. Boom. Drop down from there to where? All the way down to the daily. We pushed up from there. What did we hit? 15-minute. Boom. Push back down. 15-minute. Look at that. If I go left, let's go on the 1 hour. If I go left, this is the same exact zones. Look at that. Look at that. Look at this daily. Look at these zones. Look at that. Look at the accuracy right there. Institutional. This magnet, along with the drawing tool, along with the horizontal line. All right, you got to know how to use this. Look at that. These are institutional levels. I'm not making this up. These are, you know, when you draw your support resistance zones, it gives you, you can put it wherever you want to. These are their zones. This is what the banks are using. They got tricks. So I caught this sell from, take a look at this daily zone. So it marked up this high point at 36216, and it said when it comes back here, take a deep sell. Right? So where did we go? Where I'm at? Restart the chart. Take this here. Zoom in right there. Appreciate it. Nice taxi ride. Okay, here we are, right here. This is the daily zone. When it hit my daily zone, that's where I entered my sale. And I didn't draw this up. This is institutional. When it hit this, there was $0 drawdown, no nothing. It was just boom, gone. So when I zoomed out, I said, where's it gonna go? Now, remember on the daily chart, we drew all those red lines for daily support and resistance, right? Look at that. It just went in between my two, which is how many pips? From this one, let's take this off. This one. From here down, that's over 690 pips or 6,900 points, according to the real stock market, right? Look at the 50%. Oh, I'm gonna show you another thing too. When you use your measuring tool, you can literally track your retest. Forget the kill zone, 61.8 and 50%. Wherever it started at, the original sale, take it all the way down. Do you see this arrow in between? This arrow is institutional as well. When it hits your low point, take your measurement tool and run it. Look at your retest. Where did it retest at? When I saw a retest right here, you can almost take your measurement tool down and cheat to see how far it's gonna go down. When it retested right here, I said, that's probably gonna be the 50% of it. So I could just drag it down to see. I just wanna line that up, get out the way. I just wanna line it up to where it's at the halfway point, right here. And where did it come down to? 100%. So that tool gives you shortcuts and secrets of the past as well. If I take that and drag it left, from here, I'm gonna go left. Pay attention to this arrow. Look at this, entry point, boom, resistance and support. Never broke above that, look at that. Stayed below it, came back beneath it, broke above it here. It came back and retested that line, pushed above it. When it came down and it hit this point, that's then, you know, that's the 50% point because that's the indecision support and resistance line right there. If that's 50%, the hole is down here. So you can almost draw a couple of cheats. Now I want to show this one last thing with you guys, which is absolutely crazy. There is an extreme fake out buy zone that I have listed here. It is absolutely notorious. And you got to have these markers on your chart, no matter what. This area is right, it's the 15-minute chart. It's back. Oh, I got it, it's down here. I passed it. This is also a second confirmation. So I've got multiple US 30 charts. Let me take this off, we're done with this. I've got multiple charts for multiple reasons. All right, so here we are. You see the zone right here that I've got list fake out buy zone. You want to mark that with extreme caution. 35,790.1 on it's on Wanda. So this is where the big sale started today. 15-minute chart, it started right here at the fake out buy zone. When I saw this thing spiking up, I already knew. Let's back test a little bit. I want to show you what happened here. This area here is disastrous. I don't know for what reason. I have no idea. All right. It rejected here, went into a big sale. Here again, that looks like nothing right there. Well, pay attention. If you enter this buy thinking it's going to go to the moon, you see that? That's 155 pips in drawdown or 1,500 pips, right? You don't want to play with that. That'll take your account on US 30. Let's look at this area again. We're going to stay right here at this fake out buy zone and back test. Right here. When it hits that area, it drops. Let's keep going. When it hits this area, drop huge. That was a big sale right there. How many pips is that? From here down. Look at that. See that? It'll eat your account up. Keep going. Right here. Looks like a buy. Looked real good. Fake out buy zone right here. Drop. Took you all the way down there. Again, look at this. Pushed up. Nope. I'm not going. Again, fake out. Right here. Fake out. How many pips is that? You caught this zone, you thought it was going to buy, fake out, 190. Keep going. Let's go way back here. This area is notorious for a fake out for some reason. It's here. Looked like it was going to buy above it. Nope. Boom. Keep going. Right here. Nope, that's not one. Right here. Hit that fake out buy zone. Let's say you enter that buy right here. Boom. Took you down, man. You'll close that. I guarantee you'll close that for US 30, right? So if you back test this area, this fake out buy zone is notorious. Every single time the price enters right in this area, 35,790, it does that. It does that. You can go back as far as you want to go. Just back test it. Mark it up on your own charts and back test it. So where are we? So what happened? So this is already marked up, and I'm getting this from back testing, from getting on the sessions, keeping up. The fake out buy zone was marked right here. This is today. This is today. Right there. We pushed up, opening bell, looked like we were going to buy for sure. For sure. As soon as it hit my zone, I had a sell marked up there from that chart and from what we just did. Right here. That's the point of having multiple charts. One chart shows one thing, but another chart I got it for different purposes, right? So this particular chart is for my support and resistance all the way through. I want to know the institutional levels. So when I saw a reject there on the 15-minute chart, all right, on my chart, my official chart, that's also my fake out buy zone. Oh man, $900 in my funding account, my $50,000 account that I just got, what, Sunday. So I hit more than my goal. I wanted 500 today. I'm gonna chop it down into 10 days, 500 today. I made 900 from this move. 0.25, I had 2 of those. And so I just caught this and just read it down. And it was that smooth. Besides that, drawing mode, 2-minute time frame, auto unfair, split screen. Oh my God, this is so, one last thing, please don't kill me. Last thing. All right, so let's say, let me go to a simple chart. Is any one of them simple? Okay, it's simple. We're watching US 30 and also SPX, right? When you open a split screen like this, boom, I'm gonna open up SPX. Now, this is like the little brother of US 30. So if I wanna watch both of these at the same time, but I wanna back test, and I wanna see what happened with US 30 over here and what happened with SPX over there as well. On this box, you click it, you go down to time, and you select this right here, time, right? Now, whenever I'm over here and I'm back testing, let's say I'm going back to US 30 and I'm looking at what happened right here. Watch this. Over there. There we go. Look at this. See the cursor to my right? It's at the exact same area. So if I zoom in, guess what? It's the little brother. It makes the same moves. Look at that. So if I want to look at the same area at the same time, I click the time interval button. Now it's going to snap. Wait for it to snap. Come on. It's slow. Come on, man. I'm over here. Yeah, thank you. All right, let's go over here. All right, so this is the same area. Oh, I got to come down some. Here we go. Same area. See that? So it back tests at the same time, no matter which chart you're on. If I want to go back here, I'm going to go back a little bit. Back testing. I'm just trying to see what happened to the previous when it brought right here. Okay, let me click that once. Now, let me find it over here. Where's it at? So, two. It's acting stupid, of course. All right, so I'm right here. You can see that movement. Same thing on SPX. It's the little brother. So if you don't have enough money to trade 30, what I did to get my accounts up is I ran straight SPX, 0.01, 0.02, 0.03. Anytime Kim called out a trade for US 30, I went to SPX. Most of the time it's the same. If I target this area, all right, look at that on the right side. Let me zoom in so you can see it better. Same move, right? Came out of a sale, went into consolidation, slightly bought up, sold, consolidated, then what happened? It dropped, right? So come over here and look at that same thing. Boom. Look at that little cone it made down here at the bottom on US 30 on the left side. Look at the right, moving at the same time. You select this tool, you select time. If I take time off, it's just gonna show, if I back test, it's not gonna move anymore, right? I gotta go and pull this one back as well, right? So that's all I got, man. Just a couple of gems I just wanted to drop on you guys. I hope it helps out.
Yeah, I love seeing people that do their homework, man. Like, it's just showing that you definitely taking it serious. You definitely doing your homework, because you have stepped it all the way up, man. Like, I love the fact that you taking your own trades. You ain't waiting for nobody to teach you nothing. You ain't waiting for nobody to learn from nothing. You doing it the way you're supposed to do. So I appreciate it, man.
I appreciate you, brother. Learning a lot, man. Every single session I get on, I learn something from a trader, and I dig into whatever you drop. You know, I started with you, so we ready to run this thing, man. I'm on the road trying to secure this 50 grand, and I want to be the first 6-figure, 7-figure trader in the mentorship. I saw Kim, something that really astonished me on one of the Zoom calls. She said, "Who's a 6-figure trader from the mentorship this year?" And everyone was quiet. She said, "Who's a 7-figure trader?" And I said, "Oh my God. So you mean to tell me we got all this information, all this data, and nobody's really taking the most advantage of it?"
Yep.
Well, I guarantee I can maximize that. With 50 grand, with an FTMO account, they're paying at 80%. Are you freaking kidding me? With a $2,500 daily drawdown? Are you freaking kidding me? Let's say you run 5% a day and you're taking 2,500 a day. You're talking about 2,500 times freaking 5 days a week, which is 12.5. 4 weeks in a month, that's 50,000 a month. If they're paying me 80%, I'm taking home. My take home is 40,000 times 12. That's 480 grand a year. We don't have to use our own money anymore. We can now buy money. You follow me? So the game is broken apart. You have no excuse to not be a 6-figure trader by March. Let's say by March. Let's be honest. If you know what you're doing, stop playing, get in this stuff. Like, I want to be one of the first. That's it. Appreciate you, man.
Yep. Let me go ahead and get this over to you guys. I'm gonna stop streaming, and